Oil slid on concerns that supplies may rise once the summer driving season ends, with traders shrugging off an industry report showing U.S. stockpiles declined. Crude inventories dropped by 7.84 million barrels last week in an American Petroleum Institute report released Tuesday, people familiar with the data said. That would be the largest draw since September if Energy Information Administration data confirm it Wednesday. However, stockpile declines are common during this time of year. The Energy Information Administration Tuesday raised U.S. oil output forecasts while cutting price estimates for this year. There are only about 5 more weeks of draws, and then inventories start to rise again. You're coming rapidly to the end of the draw season for crude. Oil in New York climbed above $50/barrel early last week, but then swiftly retreated below that key level as signs of elevated global supply stoked concerns that output cuts by the Organization of Petroleum Exporting Countries and its partners aren't helping to rebalance the market as expected. That comes amid rising output from producers such as Libya, Nigeria and the US, and lower compliance by some nations to the output reduction deal. West Texas Intermediate for September delivery traded at $48.96/BBL at 5:20 p.m. on the New York Mercantile Exchange after settling at $49.17. Total volume traded was about 16% above the 100-a-day average. Brent for October settlement declined 23 cents to end the session at $52.14/BBL on the London-based International Petroleum Exchange futures. The global benchmark crude traded at a premium of $2.79 to October West Texas Intermediate. Countries all expressed their full support for the existing monitoring mechanism, Organization of the Petroleum Exporting Countries said in a statement Tuesday after a committee meeting in Abu Dhabi. Compliance with the output reduction deal was 86% in July, according to a recent Bloomberg survey. U.S. crude output will average 9.35 million barrels per day this year, rising from the previous forecast of 9.33 million and is seen at 9.91 million barrels per day in 2018, according to the Energy Information Administration's short-term energy outlook. The agency cut its West Texas Intermediate price forecast for this year to $48.88/BBL from $48.95, and reduced its Brent forecast to $50.71 from $50.79. Gasoline supplies rose by 1.53 million barrels last week, and inventories at Cushing, Oklahoma, the delivery point for West Texas Intermediate, increased by 319,000 BBL, the API was said to report. Nationwide crude stockpiles probably decreased by 2.2 million barrels, according to a Bloomberg survey before the release of Energy Information Administration data. Gasoline inventories slid by 1.5 million barrels, the survey showed. Crude stockpiles at Cushing, Oklahoma, the delivery point for West Texas Intermediate and the biggest U.S. oil storage hub, probably increased by 200,000 BBL last week, according to a forecast compiled by Bloomberg. We're in the last big month of the driving season, and the question is, can Organization of the Petroleum Exporting Countries balance the lower fall and winter demand? Said James Williams, an economist at London, Arkansas-based energy research firm West Texas Research Group Economics. There just isn't enough confidence in Organization of the Petroleum Exporting Countries yet to get us above $50. That's the big problem.